So just a couple of months ago, Professor, you were sounding relatively, perhaps relative for, Dr. Doom, optimistic about the global economy and the US economy. You did say that a Trump election victory would change that. How do you feel about that thesis now?
Certainly the election of Trump is going to make big economic policy differences. The question, what's going to be the impact on growth and inflation? Some of his policies are going to keep growth strong and keep inflation low. He's pro-business. He wants to deregulate the economy. The reduction of tax rates for the corporate sector is going to be good for private business confidence. And moving towards more production of fossil fuels is going to reduce maybe energy prices in the United States. Those sets of policy would imply good growth and inflation under control. On the other side, during the campaign, he said 10 to 20% tariffs on all imports in the US, up to 60% on those from China, trying maybe to weaken the value of the dollar, draconian restriction to migration, if not mass deportation, tax cuts that may be unfunded and increase the budget deficits, and potentially interfering even with the independence of the Fed. If they were to follow those latter types of stagflationary policies, inflation will be higher, growth will be lower, bond yields will be higher because there is more inflation and more real rates with unsustainable deficits. That's going to crowd out economic growth, and bond yields above 5% would imply a correction of stock prices and negative impacts on the economy. So the question is whether he's going to be more moderate or more radical in his policies.
And it's a combination that we need to sort of unpack, from fiscal to immigration to trade to geopolitics. But I wanted to start off with the fiscal. What sort of time frame would you be looking at in terms of the transmission to that, to potentially that stagflation, or at least, pretty reflationary impact? And how does that play out for the Fed?
Well, it's clear he wants to make the tax cuts of 2017 permanent. Plus, he made other promises during the campaign would imply that you'll have another almost $8 trillion of debt or deficit over the next decade. If those things were to happen, I think the market discipline is going to be quite quick. Bond yields have been already going higher before Trump was elected on expectation of his election. They went even higher right after his election. They went slightly lower just because the Fed said, okay, we're going to cut rates and going to wait and see. But if a certain sets of policies, starting with the fiscal, are implemented and imply higher inflation and overheating of the economy, the Fed will have to cut less, maybe eventually stop sooner, and in a scenario in which actually other policies are stagflationary, leading to higher inflation, whether it's currency or tariff or migration restriction, then the Fed could even decide to raise rates, and then the Fed and Trump will be on a collision course. I would say, however, is that he cares about market discipline, and if bond yields go higher and the stock market correct, that's a bond vigilantes in the market saying your policies are unsustainable. And if he chooses the right economic advisors, they're going to warn him against policies that eventually have such a market impact and may lead to policies that are more moderate rather than radically populist in the first place.
And you have been critical of higher equity prices and what markets are doing at the moment, which is quite a great deal of exuberance, right? Do you worry when you take a look at what market participants are not pricing in, perhaps, in terms of the downside?
Well, the market has gone even higher after his election because his policies look like they are leading to greater growth, reflationary trades, and overall pro-business, pro-private sector, pro-M&A, lots of other things that are good for the private sector. I think that markets are still in wait-and-see mode to figure out whether the policies are going to be hurting the economy, whether it's tariff, currency, migration restriction, interfering with the Fed, having unsustainable budget deficits are going to be implemented. Maybe the markets believe that the market discipline is going to discipline him in advance, knowing that policies are not sustainable, are going to lead to bond market vigilantes and the stock market punishing him. So the market is optimistic that those things are going to restrain him ex ante as opposed to ex post. And that's why the markets are rallying.
On the immigration piece, he's stuck pretty close to messaging about the threat of mass deportations. We know that that's going to change pricing dynamics when it comes to things like agriculture, for example. But how does it potentially change the whole dynamic and momentum behind America's labor force?
Well, migration in the last 4 years has actually kept economic growth strong with an increase in the labor supply and a lead on wage growth. About 2.5 million people documented or otherwise entering the United States. If it were to have mass deportation or shut down completely the border, there'll be a significantly reduction in the supply of labor in an economy where aging implies that the labor supply is growing mostly through migrants. That implies a negative economic shock, not just on agriculture. The construction sector depends on migrant workers, and therefore those impacts will be overall inflationary, less labor supply, more of a wage increases. So the question is whether this policy will be implemented or not.
Do you think China is better prepared this time for more hawkish trade policy, or do you think they're actually in a weaker positioning given the struggles of the domestic economy?
I think they're in a weaker position because potential growth has fallen, and by the end of the decade could be as low as 3%. China is dealing with issues that are structural rather than cyclical. And the growth model has been doubling down on a model where you want to increase the supply now of advanced technology, goods and services, but there is not enough domestic demand, especially consumption. So the model has been we're going to dump on the rest of the world all this excess supply. Now, even if Harris had been elected, that was not a policy that would be sustainable, and with Trump it's going to be even less so because they're going to for sure slap tariff against China. So maybe the Trump threat or shock is going to force China to do the kind of domestic reform are needed to have more consumption and less export, but I'm not sure that that's going to happen anytime soon.
The point that you make about China's slowdown being structural and many decades in the making when it comes to things like the property sector, markets seem to ignore that some of the time. So what is the fix there? Can more fiscal just fix that?
Well, it depends which kind of fiscal. If you do fiscal policy of just backstopping local government, you're not increasing consumption. If you give a tax incentive to buy a car this year, you're still in demand from next year. China needs to have a much broader social safety net because savings of household is high, consumption is low because you have to save for healthcare, for old age, for if you get unemployed, if you're a migrant worker, you don't have access to resources, and the share of income goes to capital is high, the one going to labor is low, and therefore you have structural reduction in consumption rates. So you need to do stuff like creating a wide and broad social safety net, but China doesn't seem to be in favor of it, and it's fiscally costly as well. And those are the kind of more structural reform are needed to increase domestic consumption and rely less on export. So far, those things have not occurred. I don't think they're going to likely to occur unless there is a major shock coming from Trump tariffs.
Before I let you go, I wanted to end on the Middle East. You've written about the risk still existing for Israel to strike high-risk, high-value assets in Iran. Do you think that risk has increased with the Trump administration incoming?
On one side, there's an increase in the sense that Trump, before the election, said to Netanyahu, if you want to go and strike the nuclear facilities of Iran, please do so, while Biden and Harris were saying, be careful. And under a Trump administration, probably you'll be more aggressive, both Israel and the US, against Iran. On the other side, Iran realizes that at this point, they're at risk of being really attacked, not just by Israel, but also the US. They might lead to deterrence. They might actually moderate their policy rather than doubling down on attacking Israel. If that type of deterrence occurs, maybe there could be a de-escalation rather than an escalation.